Welcome back. Well, as promised, we have the management of Suven Pharma. The company yesterday announced a proposed scheme of amalgamation for the merger of Cohance Life Sciences Limited with Suven. Now, Cohance shareholders will get 11 shares of Suven for every 295 held in Cohance. Suven Pharma's Executive Chairman Annaswamy Vaidheesh and MD V Prasada Raju join us now. Mr. Vaidheesh, can you take us through the details of this merger between Suven and Cohance?
Primarily, this merger is between Cohance and Suven, and with this merger, Cohance shareholders to get 11 equity shares of Suven for every 295 shares held in Cohance, and it's a very good deal for the retail shareholders, as it's likely to be double-digit EPS accretive in the year one itself, post-merger. So this is without synergy benefits. So we believe that as Suven, we move closer to our goal of creating a diversified end-to-end CDMO leader from India. And in fact, we'll more than double our revenue base with a combination of the two platforms. And we'll have three distinct business units with a combined, where we'll have a pharma CDMO, spec chem CDMO, and API plus. So which will give us a very consistent, stable growth profile in multiple engines of growth. And quite obviously, I'm very happy that Suven shareholders likely to be double-digit EPS accretive in a year, first year of the post-merger.
Mr. Raju, would you like to add more details of the merger between Suven and Cohance?
The merged platform entity will have significant scale benefits in many ways. The merged platform will have access to fastest growing chemistry capabilities like antibody drug conjugates, warheads that we manufacture. That is one important benefit Suven will have an access, and also best-in-class GMP facilities from Cohance side. Not only that, the entire combined entity will have best-in-class financial metrics, around 35% of EBITDA margins, 30+% of ROCE, and steady cash flow generation as well. We are likely to realize 10% of incremental EBITDA from revenue and the cost synergies over next 2 to 4 years. It's a very good deal for Suven shareholders, as it's likely to be a double-digit EPS accretive in year one of post-merger.
Mr. Raju, you mentioned 35% consolidated margins. Earlier, Suven, barring Q3, margins had fallen to 29%, has always enjoyed margins of over 40% historically. So is it Cohance that has lower margins, or is it due to a lack of recovery in Suven's margins? If you can explain that to us.
So let me just clarify. Always Suven has been maintaining 40+% of EBITDA margins. In case of Cohance, they have close to 32+% of EBITDA margin. We expect at a combined entity level, we will be in the same range of 35+% EBITDA margin.
Okay, 35% plus EBITDA margins. Got it. Mr. Raju, what are the opportunities being looked at from the CDMO space as a consolidated entity?
The primary thing is we have enough capacities between both the organizations. The key objective is to get major share of wallet from the existing customers. And it always creates a value proposition for us, because the capacities are available to us to have at least 1.5 to 2x of a growth. That's a primary view that we have.
And Mr. Vaidheesh, what kind of opportunities do you see in the CDMO space?
And of course, ADC will play a very big role, which is one of our star performer in Cohance. So that will add a very big growth engine for our combined entity.
So the previous quarter, Mr. Raju, saw pressure in both the specialty chemicals and the pharma CDMO business for Suven. Has that pressure eased by any chance this quarter?
Some of the destocking macros related challenges on AgChem has created a bit of a stress on the overall performance. And as you understand, this business itself is cyclical in nature, and we expect the recovery to come in the next 4 to 6 quarters. And the near term will not have any adverse impact, near term to long term. In pharma also, there was a bit of a COVID-related destocking has slightly impacted. However, overall pharma CDMO is continues to grow, and we also expect the AgChem business also come back to the growth path in near term.